Amid concerns about economic growth. Our guest today, George Ball of Sanders Morris Harris, says summertime is no time to kick back. Let's see what he means by that. He joins us from Basalt, Colorado. Welcome, George. Now, you say don't kick back. It's time to take a look at your portfolios and possibly make adjustments or readjustments. What do you currently see? What's a scenario you see that would justify investors making such moves right now?
Well, the market right now is what people want to call the summer doldrums. Really, I think the market is suffering from the boredom of a set of knowns. COVID will be with us through the first quarter of next year. There will be a vaccine. You've got a wash of liquidity, which is really what's driving and holding the stock market up right now. The risk of an election, but really with 71% probability that Biden will win, 29% probability that Trump will win. That's pretty much a given right now. So the market's looking for, or is waiting for, a new spark. And that spark's likely to come into ignite, as it often does, right after Labor Day. So the time to reposition the portfolio is before the fuse is lit, or when the fuse is lit and hasn't exploded yet, which is probably now, Fred.
Well, George, given the scenario that you just outlined, what moves should investors make right now? I'm assuming it's predicated on a Biden-Harris win?
It's predicated on the Irish punters, the Irish bookmakers' odds, which are usually right, about 2.5 to 1 that Biden wins. A Biden win is not in and of itself a catastrophe for the stock market. If you believe that lower taxes are good for corporate earnings, well, you would like Trump to win. But the announced Biden tax policies are about as Biden benign, or at least as Democratic benign as you're going to get. So what's going to happen that changes? I think that both traders and investors are going to worry about what happens when you can't kick the can down the road in terms of stimulus or subsidizing people any longer. And the approach of the end of that road is going to be a lot closer by the fourth quarter than it is now. And therefore, both traders and investors should and probably will realign their portfolios substantially.
Well, George, what assets should investors get into, say, outside of equities?
I've never said this before, and I've always been a blockchain, cryptocurrency, Bitcoin opponent. But if you look right now, the government can't stimulate the markets forever. The liquidity flood will end. And sooner or later, the government's got to start paying for some of the stimulus, for some of the deficits, for some of the well-deserved, very smart subsidies that it's providing to people. Are they going to raise taxes that high? Or if not, are they going to print money? If they print money, that debases the currency. And probably even things like TIPS, Treasury Inflation Protected Securities, can be corrupted. So the very wealthy investor or the trader probably turns to Bitcoin or something like it as a staple.
Wow, I never thought I'd hear you say that. I mean, we heard Jamie Dimon talk about Bitcoin before.
Jamie's at least a partial convert. I'm not sure that he's a total convert. And then the notion isn't to hide or to seek a tax refuge, but to have something that can't be undermined by the government and that won't become worthless if the currency becomes worthless, or at least if enough Robin Hooders happen to believe that. If the Robin Hooders don't want to trade stocks as they have, where are they going to put their money? There are no yields today. And so Bitcoin or another cryptocurrency becomes a very attractive, either long-term, I want to make a safe haven for my money, or a short-term speculative bet. And I think it's a good, I think it's where many people will turn after Labor Day, Fred.
So it's Bitcoin, huh? Well, thanks, George, for your investing tips. Our thanks to George Ball of Sanders Morris Harris. I'm Fred Katayama.